Hey everybody! Today I wanted to come on and talk to you about 5 factors that could have an impact on the interest rate you get for a mortgage. So let's start off with the first one, which is the obvious, your credit score. So the rule of thumb is the higher the credit score, the lower the interest rate. There are some loan programs, mostly government-sponsored loan programs, that the credit score may not have that much of an impact on the interest rate you get. But in general, the higher the credit score, the lower the interest rate that you'll be able to get. Number 2 on our list is discount points. Discount points are a fee that you pay to buy down your interest rate. And a lot of interest rates, especially any interest rate quoted online, sometimes even when you call in to places, the interest rate that they may give you over the phone will include discount points. So that includes you buying down the rate. So when you are shopping, you always want to ask for the fees associated with the rate that you are given. So that's very important. You cannot compare apples to apples if you do not know if they are charging you anything for that interest rate. Number 3 would be property type. Many people do not realize that the property type may have an effect on the interest rate. And this is a big one in the Austin area because condos are such a big deal in Austin. Condos have a higher interest rate. So there is what's called a loan level price adjustment for a condominium, and that is just because historically and statistically, condos are a higher risk for investors. So they pass that risk along to the buyers in the form of a higher interest rate. Again, there are some loan programs that kind of cut that fee down or maybe cut the interest rate or not hit you as much for the property type. But in general, if you're buying a 2 to 4 unit or if you're buying a condominium, that could have an effect on your interest rate that you're given. Number 4, the use of the property. There is a difference in the interest rate between a primary residence, second home, and investment property. So those will carry different interest rates based on how the property is going to be used. And last, number 5 is the amount of your down payment. The down payment actually can have an effect on what interest rate you are given. Generally, the higher the down payment, the lower the interest rate, but there are some occasions where if you put down less than 20%, you might actually be able to get a break on the interest rate, but you will have the mortgage insurance premium. So it's kind of a case-by-case basis on what is best for you. I hope you found this information useful, and if you have any questions about something that I have talked about, be sure to reach out to me. You can message me, text me, call me, email me. I am always available and here to help. Thank you.